Alright, how we doing guys? So in this video I'm going to be going over some of the most common trading errors that most traders make, and I'm going to give you guys some tips and hints on how to avoid these errors so that you can become a more profitable and successful trader. Now we're going to be using this stock as an example, BPTH. This stock was a hot runner last week, and I think there's a lot of great examples of trading errors that most traders make, and we can go over those one by one, and I'll just show you guys kind of what you can do mentally and physically to avoid these errors. So let's get right into it. So the first common trading error I wanted to talk about, and it's probably the one you guys are most familiar with, and that is chasing trades. So what is chasing? Why do we do it? And how do we get over it? Well, essentially chasing is buying or short selling a stock after the fact it's already made a big move, and you're really just putting yourself in a very dangerous situation by not having proper risk, by potentially getting dumped on or spiked on, and you're just putting yourself in a low probability situation by taking these trades. Now, the thing behind chasing is it's more of an emotional thing. You know, if we look at BBTH here, for example, in hindsight, you look at this stock and you say, oh, well, I could have chased it at 350. I could have bought it at 4. I still would have made money. Well, the reality is you don't know that it's going to go up to $5 a share from an opening of $2.77. Nobody can predict that. I don't care if you're Warren Buffett. I don't care if you're the Wolf of Wall Street. You cannot predict a stock price and where it's going to go. Now, the person who bought this stock at $5 a share, you can bet they're regretting their decision, right? I mean, the stock went from $5 a share and pulled back all the way down to a low of $3.20. So the person who bought here, if you look logically at this stock, why would anybody buy here, right? Like, just think about this logically. Why would anybody pay over $2 a share more than they could have for a stock? And the simple answer is emotions. The traders who bought up here, they bought over $5. They were purely trading out of emotion. They saw the stock, they missed out on this move, they missed out on this move. They said, oh man, I want to get in. So what do? They just jump in. And of course the stock dumps right as you get in, right? So chasing is one of the most common errors, and I had to struggle with this a lot as a newer trader. But what really helped me get over chasing is you just really have to understand the fact that chasing is not a sustainable strategy. If you really implement this into your mindset, just realize that chasing does not provide consistent results, then you will probably kick the habit right away. So the next time you think about chasing a trade, ask yourself this. If I took this trade 10 times, how many times would I come out profitable? And the answer to that question is probably less than 50%. Those are the odds of chasing. I mean, it's a very low probability method of trading, and just knowing that fact should steer you away from chasing in the future. And I think it's also important to mention that just having a trading system in place or a strategy really helps you avoid chasing in the future, because having a system just tells you exactly where to buy and where to sell, so you don't really have to, give in to that emotional FOMO when you have a system in place. You know what you're looking for and you know what to avoid, and obviously you will avoid chasing in the future when you know exactly what to look for in a trade. So that will help you tremendously. If you don't already have a system, there's plenty out there. You gotta find what works best for you and what best suits your personality. So moving on, we'll go to the next trading error, and the next most common trading error I find is not cutting losses. So not cutting losses is another very common trading error I see a lot, and there's a few psychological points I want to go over as to what causes this and how we can fix it. But first of all, again, I want to go through an example with you guys, and we'll see what happens when a trader doesn't cut their losses. So we got BBTH here, and we can only see up to here at this point. So let's say we only see up to here on this chart, and what do we know so far? So we know $4 is a key support level, and we know the stock is pretty strong. It's bounced pretty nicely from its lows, and it looks like it wants to retest its highs, right? So what we want to do is come up with a bullish thesis and a bullish plan to buy this stock. So our plan is going to be, we want to buy this stock as close to $4 support as possible so that we can keep our risk very minimal. And our plan is we want this to go through highs. So let's say we buy this stock. We did buy it somewhere here in the 402 area. So we did buy it 402, and now we see the stock sort of moving, and we see this dip here. So it dips again down to 395. So now we're going to set our risk to 394. So we bought at 402, our risk is 394. We have a plan for this stock to go to the moon, and we're sticking to our plan, right? So we fast forward a bit and let's see what the stock starts to do. So the stock just broke support here and it touched 390. You didn't stop out for some reason because you think this stock still looks pretty strong. It's still holding pretty decent support here at 390. You see a lot of big bidders on the level 2, and you start to really get attached to your long thesis. Now the stock has another massive drop. Now from 390 break down to 370. Now you're still in your position and you're thinking, okay, you know what? I'm gonna just cut it. I'm gonna cut it if it bounces. So you wait for a bounce, maybe bounce up to like 390-ish, so you can minimize your loss. But the stock seems to keep going lower. Now it hits 350. Now you're thinking to yourself, okay, I gotta cut my position. But you're still hanging on for some reason. There's something keeping you holding on to this trade. You just can't seem to cut your loss. Even though your stop loss is way above here, you continually come up with reasons to hold on to the trade. And eventually we fast forward this stock and we see they actually announced an offering, so that's kind of sucks for the longs, but this is the possibilities of not stopping out of your trade. I mean, this is worst case scenario, but this is a great example. So the stock ended up going, by the end of the day, I think we hit, 170. So over $1 a share from your stop loss. So what causes a trader to hold on to their losers, and why do they keep coming up with these different theses of why they should keep holding on? Well, there's a few things that can cause a trader to not take their stop, and one of those is having too strong of a bias. So this trader clearly had a long bias, and they clearly really believed that that long bias was going to work. And the problem with that is, you just don't know if your thesis is going to be correct or not. And that's why having the stop loss is so important, and that's why sticking to it is so crucial, because you really don't know if the trade is going to go in your favor. Even if you're trading a pattern that, say, has an 80% win rate, you have no clue if it's going to go in your favor on that specific trade. All you know is that there's a high probability it will work, and you have a stop loss, and you have a good profit target, and the rest is just following your plan. That's it. So you cannot control whether the stock is going to go in your favor or not. And the second point is, a lot of traders tend to take too much size, thinking they're going to be right. And what this really does is it just screws up your trade plan completely. You get all emotional, you have too much risk on, and you're not accepting that risk. Once it hits your stop loss, you're just not willing to take that loss because you're taking way too much size than you're normally used to. And therefore you're just screwing up your trade plan and just holding on to a loser until it becomes so painful that you have to just take the stop. And the third reason is just getting into a trade without accepting the risk. So a lot of traders tend to do this, whereas they have this thesis that they're going to be right, and they don't actually even accept the risk before they get in the trade. So if they put let's say a 10-cent stop loss, they don't even accept the fact that they can lose that amount of money before they enter that trade. So accepting your stop loss and accepting your risk before you enter your trade, will really help ensure that you follow your stop loss as planned, because you're programming your psychology to already have taken that loss and deal with the pain that comes with that. And so by focusing on those three main root causes, that should really help you stop out as planned on each and every single trade you take in the future. And that brings us to our next common trading error, which is taking profits too quickly or not letting a winner run. So this is basically the opposite of taking your stop. Essentially, you're just taking your profits way too quickly and you just miss out on a whole bunch of the move. And we got a great example of that also on BPTH here on the short side. So I actually participated in this trade and it actually went way further than I expected because I didn't expect the news, the offering middle of the day. But it's a great example to go over, and we'll discuss how you can trail your trades and really maximize your winners and prevent taking profit too quickly. So this trade, as we went over before, we saw that support break on the long side was definitely not a good sign for the longs, and that's basically our short signal right there. So let's say you enter this trade at the 395 break. So let's say you enter this trade at 394, and as soon as you enter, it dumps right here down to 390. But what you start to notice is there's a lot of big, massive bidders, and there's just a lot of absorbing meaning a lot of sell pressure coming in, but the stock price is not moving, and it just looks really, really strong. And you're starting to doubt your short thesis and thinking, oh man, I got to reduce my size, or I got to cut this off. It's not working as I planned immediately. And so what you do is you got your short at 394 and you just take it off at 391. So right in front of that huge support. So you didn't even let the trade come close to your stop loss, but you still took your little profit right away. And your stop loss was right here at 407, the last lower high. So you took your little profits because you were scared that the trade was going to reverse on you and stop you out. Yet it didn't even come close to your stop loss. Now we fast forward and we see that the trade eventually does go in your favor, and you see it goes very well in your favor. So in hindsight, you're thinking to yourself, oh man, I should have just held on, the trade worked perfectly. But you stopped out for a very specific reason, and the reason behind your stop was you were scared to stop out because you had too much size or you were uncomfortable with the risk. Now, a simple fix for this is basically reduce your position size so you're comfortable risking 10 cents a share or 12 cents a share. So whether that be 100 shares, 500 shares, 1,000, whatever level of trader you're at, you need to be risking what you're comfortable with losing. Now this trader, I guarantee you, had he half the size or a quarter of the size that he was using, he probably would have stayed with the trade all the way through and followed his plan perfectly. Because he was not afraid of the stop out, he was very comfortable with it, and he was trading with amount of size that he was very, very comfortable with losing had the trade not worked in his favor. But the reason this trader stopped out so quickly and gave himself a reason to stop out when he saw those big bidders is he thought to himself, oh, I don't want to lose money. I want to at least make something and be right on this trade. So he took it off right away, and sure enough, it goes in his favor very well. So this actually leads us on to our next trading error, and this is overtrading. So overtrading often comes when you make trading errors over and over again, such as the one that this trader just made, who cut his trade off way too quick. What do you think he's going to do now when he sees the stock going in his favor? He's going to want to get a piece of the action again. So what he's going to do is, most likely, he's going to just jump in again once it breaks 390. Now he has an even lower average, and he's just putting on more and more risk because the stock is going lower and lower and it's due for a bounce. So now this trader's overtrading. He's taken maybe some scalps. He says, oh, I missed that big trade. Now I'm going to get in again. Let's get in at 390 here. 390, he gets in. Boom, he takes a quick profit again maybe because he's scared again. and he knows he's overtrading, but he keeps doing it. And it's at this point as a trader where you really have to step back and realize that you made an error, and yet now you are making even more errors trying to compensate for that error. Now you are chasing the stock, you're overtrading, and you see how this just turns into a vicious cycle. So it's basically error after error, and this is the cycle of a failing trader. They don't understand why they lose money, and it's all because of their emotions. This trader missed a trade due to a psychological error. He wants back in. Now he's making more errors to make up for that error. And it's basically just a vicious, endless cycle. And honestly, this is why 90% of traders fail. They just keep repeating these same mistakes over and over again. And the only way to get over this is you really have to discipline yourself, and nobody can do this for you. I can try my best to help you guys through these videos, but really it comes down to you and how badly do you want to be a successful trader. You know exactly what you need to do to become successful. You need to follow the rules, you need to stick to your plan, and you need to avoid these errors. And I've given you some tips and hints on how to avoid these errors, but the rest is up to you guys. I mean, you can keep making the same errors over and over again, or you can make a change. You know, that is up to you. I cannot do anything about that. That is totally up to you, and it really comes down to how badly do you want it. I remember as a new trader myself, I went through all of these errors, guys. I mean, I struggled with all this stuff, and I struggled with it for quite a long time. But I got to a point where I said to myself, am I just trading for fun, or do I actually want to make a career out of this? And for me, the answer was I did want to make a career out of it, and I really did want it badly. So for me, I really focused on the rules, and I focused on following the rules, and sure enough, the results came with that. But I mean, if you're just doing this for fun and trying to make a quick buck here and there, you're probably not going to be successful, and you'll probably keep repeating these mistakes. But what it really takes is your will. And when your will to become a consistently profitable trader becomes stronger than your will to make a quick buck here and there, that's when you'll really find true success in this game. Anyways, I hope that helps you guys. Thanks for tuning in, and we'll see you guys in the next one. Cheers.